Good evening, Nick Inman from VolumeProfileTrader.com on Monday, July 23rd, and markets got hit pretty hard across the board after closing week Friday. I think Friday was a pretty decent sell signal or selling opportunity, at least to get flat or not be long the market, at least be market neutral, something along those lines. Here's the top of the high volume area, and you have a textbook reversal off of those levels, just like we got here on the 5th, and, sure enough, you see downside. So, that's what we're seeing right now. We're seeing follow through from that. So, I don't think you should be surprised by this move. Maybe the fact that it happened so quick in terms of, you woke up on Monday and the futures were down big. That's just kind of how it goes sometimes. But I'm pretty much looking from 1300 up to 1375, still the range. However, we're at the top of the range, and eventually this thing's going to break. It's going to break one way or the other. And just, casually looking at this, drawing some trend lines, maybe we're breaking this downtrend, this uptrend. Maybe we're breaking that, which is a negative, and also this trend line here seems to be holding, which is, some type of positive for the sellers. Also, the point of control for the year is up at this 1362 level. I think that matters. I think that's showing you that there's perhaps a lot of regretful potential buyers, or people who have bought and have held around that level, and they are going to be the fuel that sparks this potential sell-off to the downside. So really, I think you look at these most recent swing lows. I'm going to zoom in some. From, the 12th, I think you look down there for a potential target, and the reason why is because there's not much holding this right here, right now. Let me show you a chart of, it's 2 hours, overnight included, and I just want to show you this month's profile, looking at basically this high volume area here. We came down to that level, reversed, came up to test this month's high volume area, basically the point of control, and the sell-off continued. And I think that's what's important right now, is to realize that the sellers are still in control of this market right here, right now, and we're eventually going to see a move. And I have to say, it looks like the potential for a breakdown here seems pretty likely. And I would be looking down towards 1319 to 1314 or so as your next potential target. That would include the swing low down here from the 12th, the point of control for the last month, which still hasn't been touched, and then you can go as far as 1306. You can, I'm gonna zoom in a little bit. You can look at this, big patch of high volume here if you want to get technical and look for absolute, within a point range. But I think, generally speaking, you're looking at this high volume area right here on the S&P, and you're seeing an opportunity to sell against that level. And, it may or may not hold. Perhaps this reverses and we continue higher. But from the looks of it, I think you want to be net short this market and continue to ride that. Now, I sent out on Twitter today, towards the end of the day, that I was net long riding the market higher. I missed, trades that I would normally take, like Apple, textbook off of last month's value area value area high. We get a reversal and a nice push to the upside. I miss trades like that. I'm involved in Apple, but not by much. By the way, Apple earnings tomorrow, which, will move the market. But you look at stuff like that, and you saw there was a good trade intraday, and the S&P futures, that was the only way I was involved. and that's just kind of how it goes sometimes, which there's nothing wrong with that. And, you go from there. So I did say I was net long, riding it higher, and towards the close, I flattened on an SPY long. I took most of my profits on SPY going up. I stayed involved. Friday, I got rid of all but a really small position. Once that position got in the green, I ditched it today. So, minor stuff like that, that would, you know, not, it would be like a gnat. It would just be annoying if the market kept going down and I didn't take care of it earlier. So that's what I did. I took care of it, I got rid of it, and went from there. I'm still short Qs, which I actually, I have to admit, I did lighten up on some of that short just because it started out nice today, and then it kind of kept going in my face, so I took some profits. But this was, I had a cost basis probably in this, I don't know what it was exactly, but it's probably a little above 64. And so to see it, dip that much was pretty nice. I started this position back I think it was last week. In this range, it was a hedge, and then I was messing around with it. It wasn't a big position. It was actually kind of counterbalancing my SPY long, and I guess you could say you get a little lucky sometimes. I was scaling out of the SPY long, wasn't really touching the Qs, but it wasn't really going against me enough for me to get out of the position. And then it turned in my favor. I added to it on Friday, if I remember right. Once we got this little double top reversal with volume confirming, and you just kind of go for it, and you get rewarded. You take some off, and then you go from there. That's like IWM, and I bought 80 puts on this. It must have been Thursday morning, something like that. And that was a trade that really worked out nicely. I wasn't expecting, you expect winners, but you don't expect them to be home runs. And so, when you trade those weeklies, they expire quick. So the movement on them are high, and you're going to see big fluctuations in your price. But if you're right and it goes, you're going to see the benefits. And if I bought the puts for 84 cents, and I ended up selling them today for I think $2.85 or something along those lines, which was a heck of a trade, and you can't complain about that. And when it dips this low, and you only have 5 days till expiration, do you really want to hold on for it? To me, it's not worth it, even though it's probably going to come down to this 76 half level. We don't know that for sure, and the only way we can determine, or the only way we could really play that would be maybe to sell the 76 puts against your 80 calls, or something like that. You'd have to take out some of the cost basis. You'd have to protect yourself somehow, just in case this thing starts rallying. You're going to be kicking yourself for not taking profits on a huge gap down like that. And that's probably one of the reasons why IWM, or I guess you could say the rest of the market, we sold off hard in the morning, overnight, but we stabilized. And it wasn't like we rallied really. I mean, we rallied on the S&P, but it wasn't anything to get excited about, and that's the point. So the VIX, that was up huge. That's what you kind of expect on a big down day like this. And the euro, for example, I mean, that's just getting smashed under 121. So I'm pretty sure I was calling for some type of potential bottom on the euro. It ended up being good for a continuation to the downside. So, don't don't put too much into I guess of bottoming on the euro, because let's face it, the fundamentals don't act like, the fundamentals don't warrant uh, being long the euro, and I think that's the point. And you could probably make the same argument about the dollar, but the dollar's going higher, and you can understand why, despite the fact that you could make the argument for a lower dollar. Also, one interesting thing is gold wasn't down that much today. Let me get a daily chart. Gold held in there. It didn't get crushed. It didn't break this trend line. It just kind of held in. It was holding its own, and I think that's something positive for gold. And I'm not for certain, but I think you watch this, and I think you watch this low here, and look for a potential to get above this point of control for the month. If we can get that with some significant buying pressure, you could see a nice move in gold up towards 1620 or so, and that's where the breakout, could potentially start. Um, but I really like how this held. Look at the big volume. We have a little bit of selling against the point of control area, but it's light, nothing major, and I just want you to keep your eye on it and then kind of go from there, which, I should bring up silver. Now, silver, on the other hand, if it's any type of leading indicator, which I guess it could be, this looks like it's starting to break down. So maybe I take that back about gold, but I'm going to stick with what I'm saying. If we get just like on gold, if we can get above this high volume area, on silver, we should have a push to the upside. If not, this could be a potential for more downside. But watch the volume. Look at the buying pressure we've seen down at these lows. The selling pressure has gotten a little bit lighter. Buying pressure has overcome selling pressure. Stuff like that you want to take note of. Oil got crushed. This is textbook stuff, guys. High volume area here. Where were the highs? Here we are. Where are we selling off? Back to, well, it tried to hold the value area. Didn't. I would be looking for this 87.33 level or so. 86.70 on oil for your downside target. Maybe these lows are as low as it goes. We do have volume here. But significant volume is right here at lower levels. So that was a great trade to the downside. Too bad I didn't take it or recommend it. So overall, to conclude, I want you to be careful. I don't want you to be extremely long this market. I don't think that's the right positioning. I think you want to have some shorts out there to take advantage of a potential market breakdown, because overall, at some magical moment, we're going to break out from this 1375 to 1300 range, and it's going to be a significant move. And I'm trying to pound the table on that, and I just want you to be aware that if it's to the downside and the fundamentals, around the world, a weakening economy, are setting up for a downside move in the market, if earnings, disappoint at all, you need to be careful. The only thing I have to say is if earnings do hold up, we will probably still be range bound until I guess you could say for the next quarter, it's a possibility. But if we have any type of disappointment, for example, from Apple, slowing sales, anything like that, the market's going to take it as a reason to sell off, ask questions later, and usually that provides for opportunity. But for now, the opportunity looks to be to the downside. Take care. Have a good night.